But I'm going to jump right to the chase for me at least. What happened with wages and benefits? I mean, according to Bloomberg, up 11%. How can that be?
Yeah, well, if you recall, there was this tax act that went into effect in January, and normally FedEx would give their employees a pay increase October 1st, and they pulled that forward to April 1st. So you have very tough year-over-year comps in that line item for 6 months. And once you get into past October, so the fourth calendar quarter, the numbers won't look so, so huge. So that was a big reason for the salaries, wages, and benefit line to go up. And the other big line item you saw that went up was transportation purchased, which includes fuel, and that was up. Fuel costs were up 40%. So those two conspired on the cost side of the equation. And I would say revenues were a little better, I think, than we thought they would be, $17.1 billion for the quarter. They're on track for, I think, $70 billion is the forecast for this year. And, we think that they'll achieve it. I think, the issues facing the company obviously are higher fuel costs, tariffs, higher wage rates. They're going to hire 55,000 people for the peak shipping season, and a lot of those people will stay on after January 1st.
Well, they can only be hiring that many people if they think that their business, the volume is going to grow rather remarkably. What is the capital investment they're going to have to make to offset that?
Yeah, $5.6 billion is this year's CapEx, and that's about 8% of revenue. And if you go back and you look over the last, say, decade and a half, they've historically, so I'll call that historical, they've been in that 8 to 10% range, and they continue to reinvest in the fleet. They've got, between them, UPS and DHL, the younger fleet. Obviously, if the economy turns down or if tariffs and hampers trade, you'll probably see them replace aircraft rather than, go for growth aircraft. And then hubs, CapEx for ground is actually down this year. But this is the first year it's down after a number of years where they've invested in automating hubs and building out hubs closer and closer to the end user.